Hey guys, and welcome back to the Dutch Investor channel. Today I want to tell you how to find great stocks, and I want to explain you how I do it so that you can use that knowledge to find great stocks yourself. I'm not talking about your average large cap, and we all know how great they are. No, I'm talking about the companies that we don't even know exist and that are great. So before they even arise to the attention of other people, then we will have found them already. So that's what we're going to be looking at. In order to do so, we need to have three main steps. These are choosing a direction, number one, followed by deciding what you're looking for, and lastly, we need to choose our own requirements because everybody has different requirements. So, what do I mean with choosing a direction? In general, if you're going to look or search for something, you need to have a route, like you need to go somewhere, you need to decide where you're going. So, this is basically what I mean with this. So, do you want to look at an industry? Do you want to look in a sector? Do you want to look in a country? That's what you need to decide up front. And yeah, that's basically it. So let's get started. If you go to Yahoo Finance and you hover over the equity screener or screener, sorry, and then you select equity screener, you will get the following page. Here you can add all the requirements that you want to see, and Yahoo Finance will filter them out, and they will select all the publicly listed companies that require your selection. So in this case, they always selected United States, but I do not want to look there. So let's make our own selection. So I selected United Kingdom. Why did I select United Kingdom? Well, because of the Brexit, there's a lot of uncertainty there, and where there is uncertainty, there are opportunities. So just want to look there. I have selected small cap and mid cap, and just that has resulted in over 1,300 estimated results, as you can see on the right. And here in the left corner, bottom corner, you can add another filter. And that's basically what we're going to do next. Decide what you're looking for. Number two, this is what we need to do first. We need to know what kind of investment we want in our portfolio. So do we want value? Do we want growth, dividend, hyper growth, value growth, deep value? And you can create your own classifications, and I'm sure if you Google it, you'll find many more, but we need to decide what we're going to look for. So for now, I want to look for value growth, and whatever that specifies, well, that is up to me to decide, or you could decide it yourself. So this is just what I'll have in my head, sorry, and with this in mind, we'll go to the next step. Choosing your requirements. So choosing your requirements, if you click on the other filter that I showed earlier, there you can see all the options that you have to start screening all the equities that are publicly traded out there. So I suggest you go to Yahoo Finance and you go check that out, because you don't want to miss it. You want to see all the terms that are out there and the stuff that you can look for. For now, when it comes to valuation measures, there's many options out there. I will look for the total enterprise value compared to EBITDA, and I want to check the trailing PE ratio. And when it comes to financial highlights, I would like to check the return on equity. If we have that page, if we add those to our page, we will get the following screen. And then we can add other stuff to it. So what I decided is that I'll have a total enterprise value divided by EBIT of 6. I want a trailing PE ratio between 0 and 20, like I want the company to be profitable. That's basically what I'm saying. And I want the return on equity to be higher than 15%, because I want them to spend the money that I invest well. And that gives us 54 results. Still a lot to go through, but it gets us somewhere. So here we have the list of the companies that we see, and something that I noticed instantly, but I still wanted to keep it in here, is the market cap. See how low these market caps are? And I realized that Yahoo Finance may have something with the way they use their screeners. because they probably look at the pence, because all the publicly traded and publicly listed, I should say, I guess, companies in the UK have or are being traded in pence. And I think because of that, the small and mid caps actually look a lot smaller than normal companies, and basically these are all penny stocks by the looks of it. So I want to go back and I also want to select large caps. So I added large cap, and that will give us a bigger area to select from, and that will give us 174 companies. And I thought that was a bit too much to have an initial screening, so I increased my specs. Like, what do I want to look for? So I lowered the enterprise value to EBIT, divided by EBIT, sorry, and I increased my return on equity, and that left me with 60 estimated results. So let's have a look at the list. So you see the list here, and you can see the price changes, and yeah, basically a lot of nice information. Average volume 3 months, and the PE ratio trading 12 months. And something that's disappointing, that I did select 0 to 20, but I removed it, so that's why the list is a bit increasing. I should have kept it, because I don't initially, unless I don't find anything else interesting, I don't want to be looking at companies that do not make a profit. It could very well be the case that there's an opportunity there, but if I can have great companies that make profit, and I can have great companies that make no profit, at least in a certain year, and we're talking about a very good year, the past year, then I'm gonna prefer a company that makes a profit. So the top two is actually interesting, and for now I'm just gonna select the first one, and I'm just gonna look at it and see how it looks. So we're gonna look at Ferrexpo PLC. So that's this. What do we see here? We see a market cap of 811, or sorry, how did I say 11? Basically 810 million. These are today's price movements. Nothing too fancy here. You see a dividend, something we may want to check, because yeah, if we're looking for value growth, why do we want them to pay a dividend? And earnings per share, very good. PE ratio is very attractive, obviously. So what's underneath? That's what we want to look at. But first, we need to know what kind of company this is, because I have never heard of it, and well, maybe you did, but yeah, I didn't know what this company would do. So let's have a look at the profile, and then we see that they are in the basic materials, and they are in the industry of steel. Something else interesting is here. Ferrexpo PLC is located in Switzerland, and yeah, this is reminds me a bit of DGOC, like a company from a different country listed on the London Stock Exchange. So even though this is not why I was looking at the UK, who knows, this might be interesting. Doesn't mean that just because I took a certain route I'm gonna stick to it. No, if I see something interesting, like, I'm just trying to locate stuff that could be interesting. That's basically what this whole process is about. So let's look at the revenue and the income statement. So if you look at the top, you can see that the revenue has been increasing over the past 4 years at a pretty decent rate. Like, it didn't double, so it's not like a 15, well, it could actually be a 15 because it's only 4 years. So in 4 years they got, like, what is it? Let's say a little bit more than 50% growth rate. So it could be around 14, 15 compound annual growth rate. And then we see the net income, which has basically doubled in 4 years, which is very, very nice. That's a more than 15% growth rate. Something interesting is that in 2017 they basically had the same income as in 2019. So we want to be looking, if we look deeper into this company, we want to be looking at this number as well, because why was this so high, and why didn't it increase here, or why was it so low here? Maybe 2015 was also very high. So it was something odd, and could say inconsistent, but nonetheless the growth seems very interesting. And then we can look at the EBITDA at the bottom, also growing at a pretty steady rate. Again, it tops here and then it goes back a bit, and then so these numbers are looking healthy, and yeah, it looks interesting for now. Also, when you look at the market cap, which I put here, differs a bit from the one we saw just now because I'm taking pictures as we go. or as I went this afternoon, so I took this picture a bit later. And if you compare the market cap to the net earnings, well, that's basically how you saw such a low PE ratio. Let's look at the balance sheet. And I'm just going to focus on the liabilities for now. I don't want to make this such a too long video. I just want to show you, okay, this is what I'm looking at initially to see if something is interesting. So I didn't select the years here. I apologize for that. But again, this is 2016, 2019, 2017, 18, you know the drill. And you see that the current liabilities, while they also peaked here, they in general have been going down, which means that they're paying off debt. Then liabilities have also been going down, so it's not like they needed to increase their liabilities to obtain their growth. Obviously, we know far too little just based on this, but in general, this looks pretty good. They don't have an excessive amount of debt if you look at the EBITDA, because the EBITDA was about 550, and you see that the debt is about, what is it, 850. So it would be an debt to EBITDA ratio of below 2, which I think is fine. But obviously we all have our personal numbers for that, and some people may not like that, and then you don't want to be investing in a company like this. But something that you always know that I'm going to look for is cash flow. Cash flow, in my opinion, is the most important part, so let's have a look. I just selected the operational cash flow, the capital expenditures, and the free cash flow here. And the free cash flow has never gone below 100 million. And it did peak here. They had very low capital expenditures here. And the operational cash flow has been slowly increasing, which is positive. The capital expenditures has been increasing as well. These are probably the same numbers as this one, just so you know. And so we should just be looking at the right 4 numbers. And yeah, the capital expenditures has been increasing, and we want to be looking at that. Why has it been increasing so much? Because here you can basically see it almost doubles, but the revenue didn't double. So what did they buy? Is it necessary for the future that they have this? And in what way can we just count on a capital expenditure and operational cash flow like this? But overall, if you just look at the recent cash flow number and you look at the market cap, that is less than 4 when it comes to the price to the free cash flow ratio. So this company initially looks very interesting. As you may notice, I haven't not even looked at what the price did in the past year, 5 years, because that does not matter to me. I cannot base any information based on the stock price. I cannot. It doesn't tell me anything. If it went from like 400 to 100, what does it tell me? Is it still undervalued? Is it still overvalued? Could both be the case. However, I have now looked at the company and I think that it is attractively priced, and now I can have a look at the stock price. So I'm going to look at it from a year perspective, and then you see that a year ago it basically was above 200 and it went maybe up to 250 here. It could be a bit higher maybe, and then it went dropping. I have no idea why it dropped. That is something that we have to look into. It didn't drop based on the recent outbreak that we have experienced. So it dropped here. This is probably February, March. Since it's steel, I expect this to be related to the outbreak, but it has been recovering. So based on this price, it seems like, okay, something has been affecting this company and we need to find out what, and in what way does that change the story and the financial statements of the company. So this is just the initial screen that I do. This is how I look for a great company. Ferex does seem interesting based on the financials that I've seen, but there were a lot on the list, and I shouldn't just base my decision off of this. You cannot just, like, this is just a 15-minute screen, and there were many other companies that are looking attractive initially there. But I hope you now know what I'm initially looking at before I start diving deeper. And this seemed interesting, like there was a lot of positive stuff, and I might be looking further into this. I could also compare this to the few Dutch steel companies that we have in our country and see how it has been performing and in what ways it relates. I do not know a lot about the steel industry, but I would like to learn more about it, so who knows what we're going to do in the future about this. I want to end this with a small story. And that is that this is actually how I was able to find DGOC. And you should know that I almost discarded it. Because why? I realized when I was screening it, like it looked attractive. Based then it had like a PE ratio of 2. So it was attractive. It had very good growth. Like the numbers looked all very good. The debt was very consistent. So it was looking very attractive. But why did I almost discard it? Because I was looking for a UK company, and the profile showed that it was located in the US, and I was like, the US is overvalued in general. Like if we look at the S&P 500, the Nasdaq, like everything looks overpriced. I don't want to invest in there. But I'm happy that I did go deeper, and this is basically why I want to tell you that, because if you're just gonna follow the rest and you're gonna follow all the companies that you know, you're not gonna find great companies. You're gonna find that other people have discovered great companies and that you're gonna try and lift off of that. But if you want to do that, then I suggest you just go for an index fund or something. Like I don't see what you can, or I should say, what I can discover of a company that has 200 billion market cap and a similar revenue that all the other investors that are following it, all the other banks, not know. I just don't know what I can find. I'd rather focus on these small companies like below 1 billion market cap that is not interesting for the big banks and for a Warren Buffett and for Peter Lynch or like you name them, all the big guys. It's not interesting for them to invest in it. So make sure you do your own research. Please do not invest based on this video and this company because we know far too little. But this is just how you do an initial screen. And even if it takes you off the road and you're not finding what you were looking for, you may want to stick to it and you may want to just read more about it, dive deeper. If it looks attractive, there's a decent chance that it is attractive. So just do it. We'll see. Just it can't hurt. You will always learn something. It will always be good for you. And yeah, I hope you guys learned something today. I hope this helped. If you liked it and if you have your own way of finding stocks, I would love to know about it. So feel free to let me know in the comments. If you have any questions about this method, you know where to ask, you know where to find me. And yeah, it's late here. I'm gonna round things up now. I wish you all a great weekend and stay tuned for more content. Tomorrow and this weekend I'll be working for the cash flow statement. It's a difficult one to understand, so I do want to make sure that I explain it very well. And yeah, I hope you guys enjoy it. And good night.